there! Ever wondered? What is currency? And why does the US dollar sometimes get you more British pounds, and other times, less? Don't worry, I'll explain it in the easiest way ever. Let's go! What is currency? Currency is just money like dollars, euros, pounds, or yen. Every country has its own. You use it to buy things, pay bills, and even save for the future. Just like in the US they use dollars, USD, in the UK we use pounds, GBP. It's kind of like each country having its own type of game points. Why do exchange rates change? Imagine this. You go on vacation to London. You take 100 US dollars and want to exchange it for British pounds. Sometimes you might get 80 pounds. Other times you might get 90 pounds for the same $100. Why? What's going on? Let's break it down with a simple idea. It's like a popularity contest. Think of currencies like pop stars. If more people want the US dollar, it becomes more valuable. If fewer people want it, it becomes less valuable. So the value of the dollar goes up or down depending on supply and demand. Another thing is, interest rates matter. If the US raises interest rates, people say, I'll earn more money if I keep my savings in dollars. So more people buy dollars and the dollar goes up in value. If the UK has higher interest rates instead, people want pounds and the dollar goes down. Also, the economy counts too. If the US economy is doing really well, the dollar becomes stronger. If the economy is weak or there's inflation, the dollar may lose value. Same thing for the British pound. Other reasons like global events shake things up. Wars, elections, big news, these all make investors nervous. If people think the US is safer, they'll move money into dollars, and the dollar will go up. But if they're scared of the US, they might switch to other currencies like the pound, euro, or gold. So, currency is the money a country uses. Exchange rates, meaning how much your money is worth in another currency, and they change every day based on supply and demand, interest rates, economic strength, world events. Speaking about world event, have you heard of Plaza Accord? It was actually a huge money agreement between some of the most powerful countries in the world, and it changed the global economy. The year was 1985. The US dollar was way too strong, like super buff. Sounds good, right? Actually, not really. Because a strong dollar made us products more expensive overseas. So other countries weren't buying much from America. That hurt us factories, jobs, and exports. Meanwhile, countries like Japan and Germany in the 80s were selling tons of stuff to America, but not buying much back. So the US was like, hey guys, this isn't fair. We need to fix this. So, in September 1985, leaders from 5 major countries met at the Plaza Hotel in New York, United States, Japan, West Germany, United Kingdom, and France. They made a big agreement called the Plaza Accord. What did they agree on? They decided to work together to make the US dollar weaker. Wait, why make the dollar weaker? Good question. If the dollar gets weaker, US stuff becomes cheaper to buy in other countries. That means more US exports, more jobs in America, and less trade imbalance. So all the countries agreed, let's sell us dollars and let other currencies, like the Japanese yen and German mark, get stronger. So what happened next? It worked. The US dollar dropped in value. The Japanese yen skyrocketed. Japan's exports got more expensive, and the US became more competitive again. While the Plaza Accord helped the US, it hurt Japan's economy in a big way. When the Japanese yen got stronger, it was suddenly much more expensive for other countries to buy things from Japan. That meant Japanese factories slowed down, jobs were lost, and exports dropped. So what did Japan do? Japan tried to keep their economy growing by lowering interest rates, basically making it super cheap to borrow money. Suddenly, there was a flood of money in Japan. People started borrowing money and putting it into property, real estate, and the stock market. Everyone thought, hey, prices are going up. I'll get rich tomorrow. It became like gambling. People weren't buying homes or stocks to use. They were buying just to flip them and make money fast. After years of low interest rates and crazy bubbles in property and stocks, Japan finally said, uh-oh, this is too much. Let's raise interest rates a little bit to cool things down. But even a small increase scared investors. A lot of the money in Japan wasn't from Japanese people. It was from international investors chasing quick profits. When rates went up, the foreigners said, this is risky now. Let's take our money and leave. So all that international money rushed out of Japan. Because so much foreign money left, the Japanese yen lost support. It got weaker. The economy slowed down. The property and stock bubbles burst. It was a bubble, and like all bubbles, it eventually popped. And Japan entered what we now call the lost decades. Years and years of economic slowdown, falling prices, and little to no growth. So, the Plaza Accord fixed one problem in the US, but created another in Japan. What about the UK, Germany, and France? After the Plaza Accord in 1985, Germany, France, and the UK also agreed to help weaken the US dollar. Their own currencies got stronger, just like Japan's yen. But here's the difference. Japan's economy depended a lot on exports. So when the yen got too strong, it hit Japan hard, like a punch in the gut to factories and jobs. On the other hand, Germany had strong industries and better control over inflation. Also, Germany reunified, got cheap labor, and had economic momentum. France was smaller economically and didn't have a big bubble. And the UK was focused more on services and finance, not just exports. So while they were affected, they didn't have a huge asset bubble like Japan. Now fast forward to Donald Trump. The national debt is $36 trillion. His team had a new idea to fix. What if we reset the entire global trade system again? People started calling this big idea the Mar-a-Lago Accord. For the currency talks. Trump wanted to weaken the US dollar, just like in 1985. Why? If the dollar drops, American-made stuff becomes cheaper, which helps exports and factories. With tariffs and a weaker dollar, some factories might even move back to the US. Trump loves that. He's always saying, bring the jobs back. Trump also wants to buy and build more AI and chip factories right in the USA. Because those are the future of the world economy. Smart tech, fast chips, national security. And yep, he even tried to buy TikTok. Taiwan company TSMC is the most advanced chipmaker in the world. TSMC is already building 2 big factories in Arizona, and Donald Trump wants more. Because he thinks controlling powerful platforms in tech is the key to America's future. For us debt shuffle. Here's a twist. The Trump team had a wild idea. What if the US replaced short-term debt with 100-year bonds? Like saying, hey, we'll pay you back. Cool? So what has happened recently for the currency of the Brotherhood countries? Brother, in January, Canada was the biggest seller of US treasuries, offloading about $13.3 billion in long-term bonds. Another brother, Taiwan's dollar TWD, strengthened sharply. That rise came partly from selling dollars and letting their currency float higher. Another brother, South Korea's won, also rose sharply, reaching 6-month highs. Officials are now in currency talks with the US, and investor behavior suggests Korea is letting some US dollars go. Another brother, European Union, both central banks and investors. Central banks in Europe are actively reducing their holdings of US treasuries and dollar-based assets. Europe is shifting away from dollars and turning to gold and the euro. Another brother, Mexico hasn't sold US treasuries directly, but it's been issuing its own debt in US dollars, for example, $8.5 billion in bonds. To manage fiscal policy? For the special brother Japan, US dollar is going down, which means the yen is getting stronger. But wait, Japan isn't dumping US dollars, so what's going on? Everyone thinks Japan will dump US dollars. Looking back, tariffs? Just the appetizer? A weaker dollar? That's just the side dish. But the main course? It's much bigger. I'll see you in the next video.
Subscribe and hit the notification bell so you don't miss what's coming next. Share it, because some stories are meant to be discovered together. And stay curious. I'll see you in the next chapter.